Good morning and welcome to the Killik market update. This week we've seen quite a rally in markets, particularly in the US, and this has been caused by some comments by Jerome Powell on Wednesday, who's the chairman of the Federal Reserve. Now, he said that he currently believes that interest rates in the US are not far below the neutral level. Now, the neutral level will be the level at which the US economy does not expand or contract. And these comments actually represented quite a change in tune from what the Fed was saying last month. Back then, they said they felt that interest rates were still quite far below the neutral level, and that implied that they thought rates would have to go up quite a lot in order to calm the economy down. So that change of tune has actually caused quite a positive reaction in markets. Now, this idea that rates are quite close to the neutral level does tie in with the latest Federal Reserve dot plot. And just a reminder of what this is. Every time the Federal Reserve members have to vote on interest rates, they are asked where they think rates will be each year over the next 4 years and also over the longer term. And all of these answers are put onto a chart, and they do help to give an idea of where interest rates could be in the future. So let's have a look at the latest chart released in a Federal Reserve press release. And as you can see, looking at the section that shows the longer term, most of the dots are clustered around the 3% level. So that shows that most voting members believe that the long-term neutral level is 3%. And at the moment, the actual level of interest rates in the US is 2.25%. So it's certainly true that rates are currently not far below that long-term rate. And also this week, we've been having a look at some of the large tech companies in the US following the recent market turbulence. Now, you might remember that back in July, we looked at the race to $1 trillion, i.e. the race to become the first company worth $1 trillion. Now, have a look at this chart here. You can see the market cap of the three main contenders back in July. So that's shown by the green line. So we've got Apple, Amazon, and Microsoft. Back then, Apple was worth about $934 billion. Now, since then, both Apple and Amazon did reach a market cap of $1 trillion. But in the recent market turbulence that we've had, both have fallen back quite considerably. And it's actually quite interesting to note that Microsoft is the only one of these three companies that is worth more today than it was back in July. Now, we've been trying to think about the potential future opportunities for these companies. And to help us do that, we've been having a look at the market penetration of e-commerce. Now, have a look at this chart here, which was taken from a presentation by Benedict Evans. Now, this chart shows the percentage of people on the planet that have access to the internet, a smartphone, and that are engaged in online shopping. And as you can see from this, the future opportunity in terms of more people acquiring smartphones is not particularly high, but the future opportunity in terms of the number of people that could get involved in further online shopping is considerable. So for us, that helps to give an idea of where some of these large technology companies could go in the future. Finally, we've been having a look at the latest FTSE quarterly reshuffle, which is due to take place next week. Now, it's always quite interesting to look at this because it gives an idea of the companies that are doing well and the ones that are not doing quite so well. Now, it looks as though next week Royal Mail will finally be relegated from the FTSE 100. It's been languishing around the bottom for quite some time now, and it had quite a severe profit warning this year due to the fact that we're sending so many less letters than we used to. It looks as though the specialty insurer Hiscox will be promoted from the FTSE 250 to take Royal Mail's place. Now, Hiscox is involved in catastrophe insurance, and actually because we've had quite a few catastrophes over the last year, for example, hurricanes and floods, that has enabled Hiscox to raise its premiums, and that's made it become more profitable, hence the business is now worth more. Now, one third company to make a note of is Aston Martin. Now, this joined the stock exchange back in October, and around then there were rumours flying around about how the business should be worth £5 billion. However, today it's worth just £3.2 billion, so it's been a very disappointing IPO, and it looks as though the stock is set to join the FTSE 250. And moving on to the week ahead and just having a look at some of the companies reporting next week, we've got Vonovia, we've got Ferguson, and we've got DS Smith. That's it from us. Have a great weekend, and we'll see you next Friday.